Good morning, everybody. Welcome to today's 1 Million by 1 Million Strategy Roundtable for Entrepreneurs. 1M1M, as you know, is the first and only global virtual accelerator in the world, operating out of Silicon Valley but with a global footprint. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue, build $1 trillion in global GDP, and 10 million jobs. This is our 282nd 1M1M Roundtable, public ones. So these happen every Thursday morning, and many of you have been here before. If you haven't been here, welcome. This is your first time. You'll get a flavor of what we do here. But it is a working session. You know, we really try to help entrepreneurs move forward in their projects. So it's a working session. You could call it a mentoring session, consulting session, whatever it is. But it is also based on the philosophy of case study-based learning. So those of you who are following these sessions for a while, either live or in recording through our YouTube channel, you are getting exposed to a lot of different ideas and a lot of different questions and strategic issues and nuances surrounding those ideas. So that's how we run these sessions, that's how we have structured these sessions, and so far, so good. The event is being recorded. If you're live tweeting the show today, please use hashtag 1M1M. And please join us on Twitter at 1M by 1M and at Romana. Those are channels that we run, and we publish a lot of very deep, rich content, educational content, inspirational content, informational content through these channels. The YouTube channel is 1M1M Roundtables, which is where you'll find recordings of all prior sessions, and this one will go there as well. The call-in instructions are currently on your screen. We're not quite ready for call-in yet, so make a note of these. I will put the slide back up later on in the program. But what I want you to do is think about questions to ask, because this is a roundtable. You know, it is supposed to be as much participation from you all as possible. It's not about me or one of our guests or one of the entrepreneurs pitching only participating. We want everybody in the room to take part and ask questions and double click on the issues. Now, we're going to get started with the core part of the program, but I want to bring to your attention the Oracle 1M1M Challenge that is running currently. This is Oracle's intrapreneurship program that 1 Million by 1 Million manages. And the application deadline is coming up on November 12th, 2015. The scholarship application URL is on your screen. And if you have questions about that program, I'll be happy to take those questions later on in the program. You will need to write an essay for that program, and we've now run this for 4 years almost. So we have a lot of experience. We know what works, what doesn't work. So you'll find a lot of FAQs as well. In the announcement video, we've covered a lot of FAQs, so go check that out. But we do look forward to many more of you applying and then winning scholarships so that we get to work with you for the following year. I want to welcome Susan Mason, Managing Partner of Align Partners. Susan and I met relatively recently, and we had lunch just a few weeks ago. Susan has been at Onset Ventures for 15 years before founding her own venture fund, and is a counterexample to the memes that you hear in the industry about women don't make it in the venture capital world. And it's always wonderful for me to present these success stories and counterexamples. As you know from my writings, I'm not a whiner. I just hate people who whine. And as a result, I love people like Susan who actually do things, make things happen, and also I have not really seen a lot of whining in the media from Susan. So welcome, Susan. It's great to have you here.
Thank you, Sharmana, and thank you again for giving me the privilege to speak to all your entrepreneurs. it's just a great service that you're doing. And, you know, I'm a big believer in the education process of entrepreneurs and helping them to be even better.
Fantastic. So let's introduce our audience to you and the model that you've come up with that is a unique model. Where did this come from? How you've chosen something different? The current mainstream venture capital industry, in my opinion, is kind of spinning out of control. So let's talk about your observations about what's happening in the industry today and how are you doing something different to counter that?
Yes, you know, it's very interesting in the venture capital industry because I've been in the industry now almost 20 years. And if you look at 2015, right now it is on track to be one of the biggest years of fundraising in venture capital since 2000. So we are back from an industry standpoint, and you're seeing a significant bifurcation in the industry where you have these very large funds on the billion-dollar-plus category, and then you have a lot of smaller funds. But oftentimes what you see is the first fund is small, and I would say that as, you know, sub-$100 million category size. And then the subsequent funds tend to balloon back up to the larger one. And the challenge with larger funds is that the fund model is predicated on what I would call the outsize model, where you have 3 or 4 companies in a portfolio of somewhere between 25 to sometimes much higher number of companies in the portfolio that will deliver the outsized returns. And effectively, everything else can go to zero. And the issue with that is you have an inherent tension between the entrepreneur whose N equals 1, which is his or her company, versus a venture capitalist who takes a portfolio standpoint, and their N equals 25 on up as companies that can deliver the returns. So the issue is the venture capitalist is driven to ensure that they can put more money behind the succeeding companies and start to winnow that down, whereas the entrepreneur is putting their time and energy and really lifeblood into his or her own company and doesn't have that portfolio opportunity. So what we looked at, my partner and I, is because we had been in the industry a long time, is that we recognized a couple things. There's one is this inherent tension of what is the N equals on the opportunity to succeed. The second item is that starting around 2003, 2004, the amount of capital needed to build a company, and I speak specifically of enterprise-focused companies because we don't do consumer-focused companies, but for enterprise-focused companies, the amount of capital needed to build those companies at least to an exit inflection point that was a reasonable inflection point has just dropped dramatically. And so that opened up a number of opportunities, and we just thought, gee, is there a way to build a fund that can effectively work hand in glove with the entrepreneurs so that you don't have that N equals disparity, but you also can build a company that has an exit inflection point that fits where I would consider the sweet spot range for enterprise companies. And if you look at enterprise startups, venture-backed enterprise startups, most of those exits are in the 60 million to about 150 million. That slides, that range may slide up or down slightly, but that's really the sweet spot range. And so the challenge is, can you build a fund that addresses that and yields returns for the entrepreneur and the early employees versus having the outsized venture model? And so we built Aligned Partners around that capital efficient model, whereby our companies just need less capital. Typically, our companies take 10 million or less in total equity dollars to reach that sweet spot range of exit points. And we have a number of examples in that category.
So, you know, very much in alignment with the philosophy we practice here is capital efficient entrepreneurship. We encourage our entrepreneurs to bootstrap as much as possible and do things with, not too much money, such that you end up with not very much in wealth creation. You raise a lot of money and perhaps build to a certain amount of scale, but don't really get exits to justify that level of fundraising, which happens rampantly in the industry. And I fully, appreciate what you're saying in terms of building businesses within $10 million so that the wealth creation equation actually works for everybody, not just the investors, but also for the entrepreneurs for putting in years and years of their lives. So we are at a point in history where there's been a lot of enterprise technology that has already been built, a lot has been deployed. So sitting in almost at the end of 2015, fourth quarter of 2015, where do you see the opportunities in enterprise software or enterprise technology in general that you can point our entrepreneurs to where it's worth building new companies at this point?
I think there's huge opportunities out there, and we continue to see more and more opportunities opening up. The one distinction I just want to get clarity on is we invest typically SaaS model software only. So it's very hard on a hardware company to build capital efficiency. So in the software area, we see a lot of opportunity in healthcare IT. We think that marketplace is undergoing a lot of changes. The end customers are looking for new solutions and new ways of doing things. So we see opportunity there. We love fintech, financial services, technology. We think, again, that is an area that is ripe for change and is very amenable to capital efficient types of investment. And we also see within the enterprise itself, the infrastructure, whether that is in the financial enablement within the enterprise, accounting, or just the boring areas within enterprise management, supply chain management. We also see a lot of opportunity in security. So we don't see any paucity of opportunity for entrepreneurs. In fact, just counter to that, we see huge market opportunities opening up. And if they can enter those markets in a capital-efficient manner, I think everyone around the table wins, and in a much lower risk strategy.
So, folks, based on what Susan just mentioned, the categories, I would like to point you to a few discussions that we've had here in each of these categories. Like healthcare IT is something we have covered extensively, both on the blog and also here in the roundtables. If you want to go back and look at my conversation with Girish Navani of eClinicalWorks, Girish has actually built a bootstrapped unicorn, 100% self-financed company that is over $300 million in revenue, and really kicking ass in his space. So look that one up. We also relatively recently had Dan Kane from Modernizing Medicine. That's another very interesting healthcare IT company. And that one actually has raised a lot of capital, but is also doing really well in terms of its metrics and numbers. And then in fintech, the company that I want to point you to in the context of this capital-efficient enterprise SaaS model is Blackline Systems. Therese Tucker, who's the CEO of Blackline, was here a few months ago. She bootstrapped to a very significant stage, several tens of millions of dollars of revenue, followed by a private equity deal with Silver Lake Capital, and is getting ready to probably go public next year, and is close to $100 million in revenue at this point. And they do basically bank reconciliation for enterprises. So these are just some examples of the kinds of things that Susan is pointing to, and of course there are, the real trick is to find where is the gap and where are the new opportunities that are going to come from. So Susan, question back. how do you view the issue of TAM? So does your capital efficient model of business building allow for businesses that are more niche with somewhat lower TAMs than what the traditional venture capital industry is looking for? And these days, it's not even a $1 billion TAM, it's like $10 billion TAMs. VCs say without flinching that, oh, we don't invest in anything less than $10 billion TAMs. So how many of those are there?
Indeed. Wow, that's such a funny thing. So our view, and goodness, we've seen entrepreneurs come in with the $1 billion TAM on their slides, and we look at them and go, really, do you honestly believe that? And invariably they'll go, well, no, but we thought venture capitalists needed to see that, and therefore we put that on the slide. So we have had many discussions on this point. What we like to see are companies that have a horizontal platform capability, but can take a vertical approach to executing on that opportunity. And so from a TAM standpoint, we're less focused on the overall opportunity and more focused on the platform capability and then the vertical segments. So let me give you an example. We have a company called SA Ignite in the healthcare IT space. It is a horizontal platform, but the first target segment was around the use case of meaningful use in electronic health record usage by medical practitioners. And so that was the first attack point, and that was probably a $200 million total opportunity. And they executed on that opportunity very well. But the platform itself had the ability that once it secured a beachhead position in that initial use case vertical, using the same customer target, it moved to the pay for performance category. And so we are strong advocates of the crossing the chasm philosophy, where you would have a what we'll just call M1, P1, which is market one, product one. And we like to see using that product or having that customer base, rather than moving to an M2, P2, which would be, gee, a new market with a new product, we like to see, okay, let's go to a second market but same product, or we say same market but a second product, because stepping across those two areas are the success strategies that we've seen. So even though the initial TAM may be small, what we found with our companies is that as you add up those subsegments and those use cases, you aggregate into a much larger opportunity. But it's not evident from the initial entree. And in fact, those are the types of companies that we really like, because they attract less what we would call cheap capital.
Well, and also I would imagine then you can, if you do that capital efficiently, and exit into a large company with the channel that has, like an SAP or Oracle or Salesforce that has all those different verticals that they can access, you could conceivably broaden that portfolio, and the acquiring company then gets a lot of leverage out of that platform.
Indeed. What we've seen is that our companies that get acquired, those acquisitions by the corporates on the data points we've had tend to be very successful acquisitions. So you don't see these big acquisitions that invariably, I think, on the majority of the time fail within large corporations. In our acquisitions, right, our companies get acquired typically between 80 and 100 million. It's less than 6 years. The revenue run rate at that kind of sweet spot position is sub 10 million. And it is a textbook strategy, and we run that on every one of our companies.
Can you talk about a couple of more examples of the kinds of companies that you have invested in, and then give us, you have already started to do that, give us a bit more of the investment thesis on why you were drawn to those companies besides what you've already said?
Sure. Another company that we invested in was a company called Omni, O-M-N-E-Y. And this was a company, the team came directly out of the financial services space. It was actually this particular team, as a cohesive group. This was their second company together. The CEO, this was her sixth company. And so this was a team that hit the ground running. They saw an opportunity where even though the U.S. has what would be considered a pretty advanced banking infrastructure system, the challenge is moving money in real time. And this is a difficult challenge behind the scenes. So this team identified and built a platform that addressed that problem. You could think of it as the express train across the financial backbone that was able to deliver cash in real time. And so what they did is they built the platform, they secured large corporate entities, some of the largest banks actually were their biggest customers, as well as some of the next generation money transfer types of services. They secured that on the outset, and within 15 months, that company was acquired by one of the large credit card processors in the industry. That company required a total of $2 million to execute the strategy. Wow. The team owned 75% at the exit. So the founding team and the employees did very well. And again, with less risk, because they identified a unique opportunity, they went in and executed, and then we could have made the decision of, oh, let's put more money into this company, let's go for a $500 million exit. But the risks around that, once you go out of the sweet spot range of exits in that 60 to 150 million range, the risks go up tremendously for a startup team. And so when we sat down and looked at it, we said, okay, let's take the exit, and now they're building their next company. Excellent.
Excellent. So, folks, those of you who are listening, Susan is providing you some of the mathematics of what you hear me saying all the time is that try not to raise too much capital. Now, it would be inappropriate for me to not call out that one of the most successful companies in our portfolio has raised close to $100 million. And, that's their choice. When we started working with them, they had nothing. They just had a prototype, and we actually did all the validation work before financing. And they went straight to a Series A with $1 million with Accel Partners, and has systematically and continuously built customer bases. So today they have over 50,000 global customers. So all that is good. It's not one of the smoke and mirror companies. It's not a Snapchat type of play where there's valuation but no revenue. This is not the reality of the company that I'm talking about. The name of the company is Freshdesk. So I think they will be fine. But to be perfectly honest with you, I personally feel uncomfortable with that level of fundraising because I think it really screws up the equation in many, many, many different ways.
Sharmana, I think the key element for entrepreneurs is just be aware. Make a conscious decision of what you're going to do and truly understand the implications of those decisions. And that's really what we advocate is you can raise as much money as you want, but truly understand when you have a post money of $250 million or $300 million, you need to understand your investors are then going to be looking for well above $1 billion outcome. The number of companies in that category and the number of acquirers are very few. And then you're on the IPO track. And the reality of the IPO track is it is a very small percentage of venture-backed companies that go through IPO. So our philosophy is just understand the risks metrics along the path, and you make a conscious decision of how you're going to operate.
And what you're pointing out, Susan, is the fact that even though people believe that entrepreneurship is about risk-taking, actually successful entrepreneurship is about calculated risk-taking and risk mitigating.
Yes, absolutely. And also you have to decide, what are my objectives? If it's the risk versus the wealth equation, not just for yourself as a founder, but for all your employees, because particularly the early employees take the high risk with you as the founders. And so you need to think carefully about as the company goes on, what are the risk impacts to those employees versus the later employees? And particularly since I mean, we've been in a relatively high upturn here, and that market will be changing. We go through the cycle. So the economic cycle is coming up. And just understand the risk aspects of those economic cycles, because you can have a fabulous company, but in a down economic cycle, you're not gonna realize that much cash on the outcome.
Yeah, and we are absolutely going into a down economy. I think within the next 12 to 18 months, we are going to enter a down economy phase for sure, and capital is going to dry up. Investors are going to behave very differently, and investors actually turn on the dime. We've seen this over and over again, that investors behave, in one way in the up economy, and then it's just completely switch off in the down cycle. And then a lot of companies with potential are just going to die. If you put yourself on a venture timeline and a venture, burn rate cycle, the likelihood of your dying in the process is very high. Now, if you die, you don't succeed. There's no question. You don't even have a chance to succeed. You have to first survive, then you can succeed.
That's right. The mantra is never run out of money.
Right. So, Susan, I want to, we're approaching the end of your time here. I want to cover one topic before we finish, though. It's a controversial topic, and I am not popular in the industry for the position that I have on this topic, which is the whole women in entrepreneurship, women in technology, women in venture capital topic. So, without saying anything more, I want to ask you what your, high-level observations are on this issue, and then we can double-click on whatever makes sense.
Sure. I think it's a complex issue, and interesting enough, our fund has no gender lens. We don't care where entrepreneurs come from, what their backgrounds are, and what they look like. And so, interestingly enough, we have had the pick of the female founders / CEOs that we had not expected, frankly. And these are women who are very high performing. They've built 3, 4, 5 companies for other venture funds before. Exited those companies successfully, maybe got a nice gold watch or a nice Mercedes, but didn't really create genuine wealth for themselves. And so we have had our pick of those kind of entrepreneurs, not because we purposely seek them out, but because they're looking for a receptive environment, and I think they just find it. So I think it is, it's hard for women to go into some venture groups. But I think in general, my philosophy is that, I guess I would share your philosophy, but no whining is allowed. I don't know if you saw the Tom Hanks show on baseball, which is no crying in baseball. Well, there's no whining in venture. So you got to get over it. And because your customer base is probably reflective of that, given the C-level suites tend to be male. And you have to be able to pitch across all of it. So, I guess I would veer more on your perspective of, pick yourself up and make it happen.
So the other thing that I observe, and I know from your background that you're a ECS, Electrical Engineering Computer Science person, so am I. Yep. I have an ECS degree, you have an ECS degree. And a lot of people who are sensationalizing this women in technology entrepreneurship, technology industry issue come from non-technology backgrounds. And I was talking to a close friend of mine who shares the same perspective, is that why are people who don't have the background speaking for us? I don't hear Diane Green whining and bitching about bias. I don't hear Donna Dubinsky bitching about bias.
So again, I think it's a complex issue. I do think that there is some elements of unconscious bias in the hiring, recruiting, and promotion process. So I think there are ways to address that. I don't think it's training. I think the only way to address that is through technology, and in fact, we invested in a company called Unitive, which has a woman who's a co-founder of the company, CEO, built a very successful company in the security space before starting Unitive, and that company executed over 4 years, went from zero to a $300 million exit. So I think there is a way to address some of the unconscious bias that happens, and this is a woman that's PhD math, technical brainiac. But I think the issue is, how do we get more women into electrical engineering and computer science so the pipeline is there, and then how do we help them to be successful in companies? And I think that's the focus item from our standpoint.
Yeah, and then there's a third element, which is people who get into electrical engineering and computer science stay in, because there is this other issue of very talented, very highly trained people, and not just technical women, but women with very high degrees of education dropping out to have families. And
yeah, that's a tough one, because that's all about the partnership, with your life partner of, family balance, and it is a juggling act. I know that working moms have to juggle, but if I look across our entrepreneurs, the female entrepreneurs that we have, I would say probably 80% of them have families, so there is a way to do it, and I think, fortunately, they're very organized, they're very directed, and they just execute.
Great. So we are going to, Susan, you're staying for a little bit, yes? Maureen Felsmith?
Yes, I will.
Okay, great, awesome. So we are going to go into the entrepreneur pitch session and see what we have today. Folks, let me give you a little bit of ground rules and expectation setting before we go in there. This program is for entrepreneurs. We are completely on your side. We have no other agenda but your success. We know you're doing your best, but for most of you, since you're first-time entrepreneurs, you're here because you are trying to climb a very, very steep learning curve very rapidly. There may be things that we know how to do better, and our intent is to help you give those guidance elements with which you can move faster and accelerate. We believe that you all have potential, but it's like a uncut diamond. When you start a company, when you're in the early stages of a company, there's a lot of cutting and chiseling and polishing that goes on. And that's the place where we add value with our experience and the experience of the community that we bring to you here. It's very possible that you will disagree with either my feedback or if Susan gives you feedback, her feedback. Don't feel bad about it. We've all been there, right? People give us feedback all the time. Then we have to apply our judgment and our own internal voice to decide whether we want to take that feedback or not. That doesn't mean you shouldn't listen. Listening is important. But then you decide which ones to listen to and which ideas to not listen to. The other point that I want to make is, do not assume that raising money is success. Not all businesses can raise money. Raising money does not guarantee success, and it is not necessary to raise money to be successful. We're here to work on your business. This is a working session. And doing something worthwhile is very hard. Prepare for a marathon. This is not a sprint. It's going to take a while. It's going to take years of your life. Do not get into being an entrepreneur without that understanding. This is not something you can do in a 6-month, 9-month period and flip it and become rich. It's not a get-rich-quick scheme, and that's certainly not the way the 1 Million by 1 Million program runs. If you're not pitching, as I said, please participate by asking questions in the chat or by calling in later on in the program. Asking good questions is how you learn, by kicking around issues. That's how you're going to learn. So We're going to start with Kiran Nagarajappa from Bangalore, Rent My Stay. Kiran, please unmute your line and tell us what you're doing.
Hey, hi Samara, good morning. It was a wonderful conversation between you and Susan. So to get started, so I am the co-founder of Rent My Stay. We help people find furnished homes on Flexi Rentals. Flexi Rentals, we mean basically they can rent for any duration. Okay, so there's no lock-in period or anything of that sort. Can you go to the next slide? See, renting is always a effective and cheap way of staying. Okay, but when it comes to renting for a shorter duration, it has its own challenges, mainly because of the lock-in period and because you had to set up the house for your short-term need. Okay, so because of the lack of option, people have not been going forward for renting houses for the shorter duration. Okay, and we have seen people breaking these agreements when they go for rental agreements for short period, or they may choose a hotel accommodation and the cost is much higher there. Okay, and they may choose paying guests which are poor in hygiene and not an effective option. So in each of these options, there's a compromise that one has to go through. Okay, can you go to the next slide? At Rent My Stay, we work with the host to offer furnished accommodation on Flexi Rentals. Okay, so what that means is you can rent a home for as long as you want. So you don't have to go for the lock-in period. Plus our offerings are standardized. Okay, so that means you know exactly what to expect in a house that you are going to get into. Plus you can move across any of the accommodations that we have. So effectively, like if you're staying in location A or location B, you can shift to an accommodation that is in location B when your office, let's say, shifts, or when you are on a project which is going to be happening in that location. So you can always stay close to your work. Okay, and the shifting can also be across the city. So any of the properties that we have listed on our platform, you can actually switch across those. Next slide, please. So we are essentially in this market we are essentially focused initially on the short-term segment. So these are people who are staying for less than 3 months. If you look at the statistics in hotels, essentially there is almost 31% of people who stay for 5 days or more, and that's effectively the area that we are targeting to begin with. And as the time goes by, we'll be looking at slightly longer stays as well. So in terms of market, this is a pretty big market. So there are a lot of different category of people. People who are looking for job relocation, medical tourism, and family visits. So and in all these cases, this can be a niche option for them to go for, because I mean, people have been going through a compromise when the stay duration is longer by settling in a hotel or a PG or trying to rent a house and going through all the hassles. So we actually pose for them an effective option that they can choose without any compromise. So in terms of revenue model, so we work with the owners. So the owners, by working with us, can increase the rental income by at least 20 to 30%. We make a cut of 15% on top of every transaction. Plus, we also have exclusive access to the inventory. Okay, and we have seen, compared to any hotel accommodations, the guest saves at least 40% on his stay. In terms of offering, we are currently focused on the medium range. This is basically, these are the numbers based on our accommodations that are available in Bangalore. So they are the rates in INR and 1,000. So it's like we have a studio starting from 8,000 a month to 20,000 a month, and so on. So we are currently bootstrapped. We are three co-founders. We have two of us come from the business background, and I have another co-founder who comes from the management background. So we form a strong team who can effectively execute this project.
Kiran, are you already transacting? Sounds like you already have a business that's moving. You're already moving some inventory, yes?
Yes, we have gotten wonderful feedback in terms of our product. So we have already completed around 10,000 nights of booking. Okay, so we are doing a revenue of around 12 to 15 lakhs a month as of now. And what's amazing is we see a 95% occupancy rate on our platform. So this is effectively because we work with guests who stay for a reasonably longer period of time. So it's a benefit for both for all the three parties because there is less churn, and once a guest occupies a place, it's going to stay there for a reasonably longer duration of time. And from the owner also, it's less of management because once a guest checks in, so the majority of questions are there in the first few days, and once that gets cleared, the guest knows how to get things done. Right.
And how many properties do you have on your platform right now?
So we have around, so basically we work on two models. So one is where we have our own inventory that we take and we let it out for short-term guests. And in the other model, we work with the owners who give us exclusive access to the inventory. So in both of these combined, we have around 100 units. Okay, so 80 of them are live and we are transacting on that, and 20 of them that we are onboarding right now.
Okay. And what does it take for you to bring these both sides of the marketplace live? So both the property owners as well as the renters. What has been your experience? What's working in terms of bringing them on?
It's about the education because in this equation, it's a good deal for all the three parties involved. Okay, and so what we are doing is we are working continuously with these owners. So when we set up initially, we had our own units that actually enabled us to kind of showcase this model to the owners so that they can actually see firsthand on how the whole thing works. And we have been doing it continuously. We have been educating the owners on a continuous basis, and we are banking on word of mouth. And we have seen a lot of guests of late coming because of word of mouth and because their neighbors have done it or their friends have done it, and that has been working out. And we are also looking at PR now to get more people to actually come on board as a host on our platform.
And what kind of growth rates are you seeing right now in terms of revenue growth?
We are seeing phenomenal, very good revenue. On month, we are at least increasing around 10%. I mean, in terms of the owner onboarding. I mean, like in all these things, we feel there's an exponential growth possible because once there is a sufficient number of people who know about us, so it's just about getting them on board. And we are continuously striving to make our platform stabilized so that when the growth happens, we are in there for taking advantage of it.
All right. So what are your questions?
Yeah, one of the first questions is, of course, we wanted some inputs from you on the pitch that I presented. Yeah, and the second question is, what are the effective ways for us to reach out to these investors? Because, I mean, like in terms of, we're still working on our network with investors. So, I mean, what would be the better way to expedite this process of reaching to more investors?
So let me ask Susan for feedback on what you heard so far.
Sure. Kiran, congratulations on getting this up from ground zero and doing such a great job on the progress. Really nice work. I think on the presentation itself, you might put a couple slides way up front that really highlight what the stage of the company is, the fact that you're at revenue, the type of growth. Just put one slide up front, because when I'm looking and listening to you, I'm bucketing the company automatically into stage and type. And if I had that pretty close to the front, I'd go, oh, this guy's already at revenue. He's already got, 10,000 nights of booking, and just put some metrics up closer to the front. so that I'm not waiting till the very end of this to figure out what stage you're at. And I think the other element is I'm not seeing kind of business model metrics on the financials. That's obviously a key element for us to take a look at, because then we can tell what the scaling level is.
And folks, all of you who are listening, what Susan said is something that to keep in mind is if you have traction already, put that up front, because that changes the conversation with investors immediately. If investor conversation is your goal, that really changes the conversation immediately. If you are a concept that is, getting a little dribs and drabs of, traction, that's one thing. But if you have good traction and if you're showing revenue and good growth and the kind of metrics that you've put at the end, Kiran, bringing that up front will grab the investor's attention right away.
Sure.
Now, your question about talking to investors, I would clean up first and foremost your presentation. There are things missing in this presentation, a lot of things missing in this presentation. We have templates, that need kind of like of course, you had a small amount of time here with investors. You will have more time, so you can flesh out this presentation with all those missing elements. One of the things that I always find unsatisfactory in these presentations, and yours is also unsatisfactory in that aspect, is your TAM analysis. What is the TAM analysis? How did you come to this TAM analysis? Just $1 billion TAM, you're saying it's $1 billion TAM. What is the justification for $1 billion TAM? We are not interested in top-down TAM analysis. We're interested only in bottom-up TAM analysis. And where is that bottom-up TAM analysis? What are the assumptions of a bottom-up TAM analysis? So those would be points that you need to keep in mind in terms of actually sitting down and talking to investors. Now, in terms of investor outreach, I would have to look at, what you've done, whom you've talked to, and as far as 1 million by 1 million is concerned, we introduce people. Once our entrepreneurs are ready, we introduce people to investors. So if you were working with us, you would be using our network for that purpose.
Awesome. Yeah. Sure.
Okay.
I had one more last question. So do you think it's also a good approach for us to B2B in this case? Because one risk we have seen with B2B is the payment cycle is longer. So what do you suggest in this market, because it was going for B2B?
You mean B2B as in renting to corporations?
Yes.
I was thinking about that when you were presenting. The payment cycle may be longer, but I think the marketing cycle is going to be, customer acquisition cost is going to be a lot smaller. If you can do enterprise deals where, corporations buy blocks of accommodation from you, the marketing cost is going to be dramatically lower. So you want to balance that. Maybe you want to keep some of this B2C business for cash flow purposes, but if you can get a few anchor enterprise customers, it would make, scaling dramatically simpler. And by the way, from a cash flow point of view, if you have large enterprise customers, you can get banks to finance those contracts.
Sure.
If you have credible enterprise customers, banks will give you the working capital like that.
Yeah. Sure.
And you have a question?
We'll definitely.
Kiran, you have a question from the audience. Sridhar Raj is asking, can you please talk about the competitive landscape and how do you stand out?
So in terms of competition, definitely, in terms of loose competition, we see Airbnb is one of the platforms that people look at even when they are looking for a reasonably longer duration. And where we distinguish is our accommodations are for the entire house. So we don't generally let out a part of the house. Okay, and apart from Airbnb, we don't see there being a lot of players. People look at alternatives as of now, which is generally the hotels and service apartments. But when it comes to comparison with service apartments, our costs are much lower. So we have seen, for example, 1 BHK from a service apartment in Bangalore would cost something like 30K, and we start from 16K. So there's a lot of delta for a similar quality stuff. So we're able to bring it down for 2 reasons.
Sorry, go ahead.
Yeah, so we're able to bring it down because of 2 factors. One is because the owner himself is letting out these properties, so he does some of the management. Plus, we don't provide service, so these are no service apartments. Okay, so once guests occupy it, they're going to use it for as long as they stay and clean them. So and we have seen that has been very well accepted by the guests that we are working with.
So how do you position against Airbnb? If you look at in India especially, there are not enough hosts, so that's a key challenge for any company here. So by working on these long stays, we are able to have the owners accept it in a much more easier way because there's a less churn of guests here, and that has been helping us to gather more and more hosts. The focus is to not compete with anyone, but just keep focused on building more and more hosts, and we believe that the rest of things will happen like this. Okay. So it's essentially that your renters are more 3 months kind of renters as opposed to your Airbnb 2-day, 3-day, 5-day kind of renters.
Yes, typically our customers stay for around 2 weeks to 2 months. So that's the range that most of our guests fall in. And
Sridhar is asking you about some other competitors that he seems to know about: No Broker, Grab House, Refind. Do you have points on those?
Those companies essentially they are a platform to discover rental accommodations, but we are exclusively for flex rentals. So we exclusively work with owners who actually give it on a short-term basis. So you wouldn't effectively find the accommodation for short-term on these platforms.
Right. All right. Thank you, Kiran. Great presentation and very good progress. So good luck with moving forward with this and building it further. Maybe we'll be using it at some point.
Yeah, thank you so much. Thank you very much. Yeah.
Mezal Norman, you're up next.
Yeah.
Telefix.
Hi. Thank you very much for this opportunity to present. My name is Mazan. I am Norman. I am with Telefix Technologies. We are in Dallas, Texas, and I did answer your question about a fun thing. I do love to dance. It keeps me energized and keeps my brain moving. Can we go to the next slide?
You love to dance, so do I.
Can we go to the next slide, please? So our value proposition is we help to get field workers get their work done right the first time and businesses to improve their cash flow. These are problems we encountered when we launched a service contracting business. This was in 2009. We found that we were blessed with millions, triple-digit millions in contract opportunities to build LTE networks. I was ambitiously wanting to solve the drop call problem and improve coverage because my end goal is to build communities, and I figured we need to have better, reliable networks in order to do this. So I figured I'll solve that problem. However, to solve that problem, we have no skilled labor and a bunch of challenges. Nobody invests in service companies, and so I bootstrapped. We got some investment capital. I used that wisely, but we found the payment cycle was an issue. So being who I am, I figured I'll solve this problem. What I did is I created a remote monitoring solution. We call it NOS and COP. Knox is a solution that provides customers real-time video of their remote work sites. And we implemented a best practice process workflow. It really is just common sense. Just today's environment, for example, everyone gets a project and they run out, and kind of like baking a cake, they kind of stop halfway to go find the ingredients, and it's just very discombobulated. That lends itself to forever needing capital and cash flow, and the whole industry I found was amok. So I put in my process. I now have where customers can monitor and intervene work sitting at a desk or from a mobile device to reduce errors, and one of the biggest pains in the industry is revisit costs. We do that by guiding workers as they work. This solution involves Android smartphones, wearable devices, and with Verizon's M2M connectivity. I'll expand on the Verizon M2M connectivity award of a vertical solutions contract a little bit later. We are monitoring the on-site workflow process, performing quality audits and project management, all from the remote command center. Our pricing is tiered based on the options we were able to secure being under our Verizon contract. We are very aggressively wanting to roll this out and have a subscription and license model as well. Next slide, please. Our company, as I said earlier, we are a leading provider of advanced wireless solutions, and we created this innovative field site management, documentation, video monitoring solution. We're currently headquartered in Dallas.
So you've already gone through all that. No need to repeat.
Sorry. Yeah, the slides seem to have gotten.
Let's focus on what customers are you working on, and what are the use cases in which you are coming in and making an impact?
The customers are pretty much in the telecom services and the construction service industry.
Okay.
With our partnership, they feel we should be on all verticals. It's very difficult to do that, including especially in the healthcare IT, where we've got to gain HIPAA compliance and secure tunnels and so forth. We're in the process of doing that. I feel
but
right
you should
now,
not be going into multiple verticals in the beginning. As you heard in the conversation we had with Susan, well understood and well known best practice in growing businesses is to focus on a vertical and really build a business in a vertical, as opposed to trying 3 different verticals at once.
Yeah, that is something I think with our partnership, they'll feel that users, and so we just decided that it's a service industry, and in the service industry there are several market segments. In those market segments are construction, oil and gas, energy, telecom, for which the solution was founded, and then there is healthcare. I am not able to do the healthcare, rightfully said. I have just pushed that to the side. I can't do that right now.
So, we're quite a distance into your presentation, and I still don't understand your business. And that's a little bit concerning because, I'm a reasonably smart person. I grasp things very quickly. So if you don't mind, I'd like to give you a bit of feedback about this presentation itself. And I think there are some fundamental flaws in how you're presenting. So when I listen to a presentation, the first thing I want to know is what is the product, who is the customer, and what is the traction. And here we've spent, almost 10 minutes now. There's a lot of blah, 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 but I haven't got the core nuggets of answers to those 3 questions. So when you repurpose this presentation, answer those 3 questions. So now let's just do it in real time. What is the product? answer this question in one sentence, not 15 sentences, one sentence. What is the product?
The video monitoring or remote solution.
And who is the customer?
Customers are in the services industry. It's telecom, enterprises, small, medium, and business.
And what is the traction? How much of this have you sold so far?
We have a very large pipeline. We have not yet rolled out fully. We're in that rollout stage right now. We secured a contract with Verizon Wireless as a solutions partner to facilitate. So
you don't have any revenues yet? It's all in kind of concept.
Right, right. Well, it's in that phase where we are securing devices. What we ended up having was an entire network. The solution evolved, and this is why it's very difficult. Solution evolved from a problem. It was sold to an enterprise, to both enterprises, very lofty, before it was developed. So
okay. So tell us what are your questions?
My questions are doing exactly what your feedback was. I needed to be able to figure out how to communicate this solution because it is so large. Verizon discovered us, took us into their lab, invested in us, provided their solution architects, and all of the partners to bring the solution together for us. So it was to solve one problem. In the reason our business was launched, we have now extracted with a unique opportunity that came out of the service sector. Now it's a standalone, almost a SaaS model. It's platform as a service. We're integrating wearable technology, and it is just. So I need to learn, as you said, your feedback was spot on, how to communicate a completely different business model that has evolved out of one business model. It's a huge challenge.
No, but that's not the point. No, you don't need, history is not important when you're pitching to customers. Think of this as a customer pitch. For the moment, the big flaw I think you're encountering in communication is you're not able to convince customers to buy your solution. And that's part. The problem is that the product has not been positioned, one, and two, messaged properly. You're going all over the place. You're going through too many verticals without figuring out what is the one vertical, one use case that you can really, really solve a burning problem in. And from just kind of like listening to you a bit and going through your slides a bit, I am of the opinion that you need to do very serious heavy lifting in positioning your product. The way you have it right now, you will not be able to score sales.
Okay.
So pay attention to that. Pay attention to figuring out what is that positioning that is going to identify one niche market, one niche product that you can go and close business in. That's really key. You are right now all over the place.
You're right.
Okay? And we'll be happy to help you if you decide that you want to work with us. We'll be happy with this. This is exactly what we do, is help people move forward. And positioning is not something that you learn in everyday life. We'll teach you positioning. We'll help you through this process. If you decide to work with 1 million by 1 million, I'll explain to you how to work with 1M, 1M. But that is really your #1 action item going forward from here.
Awesome.
So if you take away one thing from this session, take away that is your homework.
Got it.
Okay?
And that's exactly what we need to do.
Good. Okay, so those are the two presentations for today. If you like what we are doing here, folks, we would appreciate if you bring serious entrepreneurs into 1M, 1M. In your friends, in your family, in your networks, in your colleagues, whoever is doing entrepreneurship and is a serious entrepreneur looking for help, we are here for you and for them. So bring your friends, bring people over. so that we can, make this repository of knowledge and experience and network that we've put together here, we can, make it work on your behalf. So I'll take you through, in a few minutes, I'll take you through the resources that you can expect to use through 1 million by 1 million. Everything is at 1m1m.com. So just go there and you'll find the vast repository of information out there. Our blog is a free blog. You will find immense amount of, highly inspirational, educational, informational content there. The Entrepreneur Journeys book series, we've published 12 volumes of. These are case study-based learning books, and you will, again, be able to explore topics in great detail by studying each of these books. There is actually a book on positioning, so you can, look at that as a starting point. Then we have a ton of information in the premium program. You will, on the website, there are lots of videos about the premium program. These free roundtables happen every week. So take advantage of them, come back as many times as you want to. Go register on the website to attend or to pitch, and you will receive the join-in instructions. The premium program offers extensive methodology guidance. We have a curriculum, we help you with methodology, we help you with business development, strategy consulting. These kinds of sessions, much more in-depth sessions, happen for premium members only. And we also help you with financing through our network and also with media relations. We have a lot of clout in the media, we have a lot of reach. We control big, mouthpieces, big kind of megaphones, and we can get your word out there. The $1 Million Club on the website is a set of case studies of success stories in 1 million by 1 million. You will find ROI creation analysis on the website as well. We provide $375,000 plus 5 to 10% equity worth of value in the program for just $1,000 annual membership fee. We do not charge equity. So this is a very key differentiator. And you can go take the self-assessment. We consider, even whether or not you're raising money. If you're raising money, you definitely should do the 1M1M self-assessment. But even if you're not raising money, we recommend that you do the 1M1M self-assessment, because you are investing your time and energy and emotions and years of your life into a venture. So you must make sure that you're investing in a venture that has legs. And the self-assessment will ask you the right questions that you need to ask of yourself, of your venture, of your business model. There's, just tons of information on the website through which you can evaluate the 1M1M program. We have over 600 entrepreneurs and investors who have helped us put together this program through their case studies, their experiences, their insights. You heard Susan Mason today. On our YouTube channel, you'll hear many, many, many more people who have insights and perspective to offer. And in the premium program curriculum, we have over 600 of them who have shared their advice and their strategies, which we have stitched up into a really powerful curriculum. So if you, for instance, let's say after this show today, if you decide to join the program, the first thing you're going to do is go start studying the curriculum on whatever topic that you are working on. Earlier today, we talked about positioning. So if positioning is your issue, you go directly into the positioning module, study the positioning module, listen to the video lectures, study the case studies, and start working on your own idea in the context of the methodology that you're going to learn. Next Wednesday, we have a private roundtable. You come back at that private roundtable and present what you have done on the basis of what you have learned in the curriculum, and I'll work with you to give you feedback and so that you can move forward. This is how we work. It's basically a combination between the asynchronous learning in the curriculum and the synchronous learning in the roundtables, where you get feedback and guidance and so forth. And trust me, we're making incredible progress with the entrepreneurs who are following that methodology. They're really learning, they're really making progress, and they're really covering great grounds. Our methodology is lean, capital efficient, bootstrap startups. I would rather you build a company for a small amount of money or no outside capital at all, and really make money yourself. That's kind of my criteria for success. I'm not interested in steering you towards raising huge amounts of money, and then you get into liquidation preferences, anti-dilution clauses, and investors and get bad exits. Investors get some money back, maybe not, and you make nothing. This, to me, is not successful entrepreneurship. As I said, we work with you on the media relations, and we do a lot of coverage for you through both our relationships as well as our own media channels that we run, both social media and mainstream media. And if you are running an entrepreneurship program or trying to, mature an entrepreneurship community anywhere in the world, we'll be happy to work with you as an affiliate. So do consider the affiliate program. We have 3 more free roundtables in November, 5, 12, and 19th of November. And after that, I am traveling for a bit. I'll be in Europe for a few weeks, and then we're going to resume with another couple of roundtables in December. So still this year, you have another, I think, 5 or 6 roundtables to avail of. Please do avail of them so that we get to get more work done this year. If you're still looking for an idea, a good startup idea that has, momentum, power, impact, I have published 45 of my billion-dollar ideas in Vision India 2020. Now, Vision India 2020 leverages India either as a market or as a production base, but the concepts apply to all the emerging markets that have similar kinds of dynamics. So you can apply these businesses to Latin America, Asia, East Asia, Africa, all kinds of markets. So take a look at it and see if any of this, triggers ideas in your head. And you're welcome to take any of them and develop them, and if we can, we will help you build your ideas. The One-on-One Incubator in a Box is our platform, which we use to work with companies, governments, etc., to develop their incubation programs. This is what Oracle is on. This is what our partnership with the Delaware government is on, and we've done many other partnerships on this model. So if you're a corporation or a government or an economic development agency or a university that is looking for a platform to develop your incubation program on, we are here. Call us. The latest Entrepreneur Journeys books are Billion Dollar Unicorns, Carnival in the Cloud, Bootstrapping with a Paycheck, From E-Commerce to Web 3.0. Check them out depending on your own interest area. We're ready for Q&A. I hope you've been thinking up questions while I've been talking. Now it's your turn to talk, question, raise issues, and introduce yourselves. Please use the public chat to introduce yourself. Tell us who you are, what you're working on, what is your product, what is your market, what kind of traction do you have so far, and what brings you here? What are you trying to accomplish by coming here? How did you find out about us, and how can we help you? So public chat is all yours. Phone line is open. Let us know if you'd like to call in and talk. There are a lot of people in the room. I'd love to get to know you. Please introduce yourselves. And while you're doing that, let me introduce you to Irina Patterson, who is your contact for the 1M1M program. If you have questions about the program, if you're considering joining the program, Irina would be happy to help you address any of those issues. Maureen is putting a question from Quora this week. And the question is, should I keep bootstrapping or should I seek funding? Well, I answered this question on Quora, and the link is on your screen. The answer that I gave is, unless you can start showing traction that customers are using your marketplace and paying for it, you won't be able to finance the project. I would focus on that first, which is to gather momentum, gather traction. And, that's basically your first base. And without doing that, there's nothing you can do in terms of raising funding. So those of you who are contemplating raising funding but don't have traction yet, don't waste your time. Well, there's so many people in the room. I would love to know who you are. Don't you want to introduce yourselves? Don't you want to ask any questions? Okay, let me ask you a question and you can answer in the public chat. How many of you are here to contemplate and are contemplating raising money? And how many of you are here for learning purposes? If you're here for funding purposes, type in F in the public chat. If you're here for learning purposes, type in L in the public chat. Let's play a game. F or L? Raju Bendre, L. Sridhar Raj, L. Richard Caballero, F. Vivek Brahmbhatt, L. Who else? There are a lot more people in the room. Anybody else? Raju, where are you joining from and what are you working on? Same question to Sridhar, same question to Richard, Vivek. Please tell us more. Sridhar is from Venture Soul, a startup services ecosystem in the works at Bangalore, okay? Others? Other introductions? No? Raju from Manipal, incubating your next move. Raju, do you have a job right now? Are you working somewhere and thinking about a startup while you're working a job? Richard says Comlinked is a B2B social networking company, networking for companies globally. How is that different from LinkedIn, Richard? Vivek is from Chicago, Illinois. Vivek, what are you working on? Would love to know more. We have a bit of time today to get to know you a bit more. Niraj Kumar Singhal from Delhi. Niraj, what are you working on? You're an angel investor, all right. And what kind of projects have you invested in so far? Anybody else? Richard, whereas Facebook is personal-to-personal connections and LinkedIn is professional-to-professional connections, Comlinked is company-to-company connections. All right. Sridhar Raj, grand vision is to create a microcosm of the valley here and help startups, not an incubator or an accelerator per se. Raju Bendre, have quit 2 months ago helping a startup in the industrial internet space. Niraj Kumar Singhal, IoT, FinTech, healthcare, and education are the types of spaces you invest in. All right, terrific. So questions in the audience? If you don't have questions, then we're going to wrap up and get going. Sridhar is asking me, when are you visiting India next? What is your take on the maturity of the startup world here? Sridhar, I will be in India next year. This year I'm kind of maxed out on my travel. I've traveled a lot this year, actually. I'm heading out to 4 countries in Europe in a few weeks. To answer your question about the maturity of the startup world in India, India has matured greatly, and it's been a real pleasure. You know, I've been working on this ecosystem, on the Indian ecosystem for 10 years. We have a huge adoption from India, 1 million by 1 million. If you come to these roundtables, you'll find continuously Indian entrepreneurs. And the presentations are good. The businesses are good. Like you saw here today, earlier, the first presenter was from India. It was an excellent piece of work, very good maneuvering, very good navigation. And we are seeing that across the board. We are seeing a lot of energy. We are seeing a lot of interesting ideas and good execution and good bootstrapping. I think, Indians tend to be good as bootstrappers, and that's what is, in my opinion, the ingredient of building a successful entrepreneurial career. So it's very good. I love it. There is some problems, of course, in the ecosystem because there's this bubble going on in the e-commerce sector in India, and there's all the diseases of Silicon Valley have percolated into India of, e-commerce companies getting too much money at too high valuations, and that's going to screw things up. That bubble is going to burst. But I think at a grassroots level, grassroots capitalism in India is developing very well. And, we've done our part and will continue to do our part in stimulating that effort. And it's really, really interesting. Raju Bendre will be coming back to you in 2 months' time. We'll be following 1M closely from today. Great. Sridhar is asking, what are the gaps, what problems we can help solve in the space? You should ask your entrepreneurs in Bangalore what their gaps are and what they cannot find. I'm not the right person to ask this question. I'm not your customer. Your customers are going to be the entrepreneurs operating in Bangalore, so you should ask them what are they looking for that they're not getting from the ecosystem. Bangalore is a very crowded ecosystem today. So you're talking about too many Me Too's. There are a lot of players trying to be ecosystem developers and accelerators and incubators in Bangalore right now as well. All over India. Anybody else? Any other questions? All right, folks. Thank you for coming, and we'll be back here next week. And please book your slot if you would like to pitch, and we'll look forward to working with you further. Raju Bendre, you're asking, what's your take on industrial internet? Are you talking about Internet of Things? Sensors in the machinery and so forth? Is that your definition of industrial internet? If that's your question, then we actually have a Thought Leaders in Internet of Things coverage on the blog. So you may want to take a look at some of those interviews. We have brought on a lot of interesting guests who comment on that space and what's happening, what are the issues. One big issue, one big pushback on Internet of Things is cybersecurity. So you'll see that that's one of the reasons people are going a little bit slowly in putting sensors everywhere, so that the surface area that you expose to security breaches just goes up exponentially if you roll out Internet of Things in your organization. And people are very sensitive and very cautious and afraid about that phenomenon. You don't want your operation to get hijacked at a massive scale just because of that level of exposure. So cybersecurity is a very big concern in that space. Does that answer your question? All right, folks, I look forward to seeing you back here next week. And, remember one thing, all of you who are starting up new things, customers is God, not investors, customers. So not investors, not experts, not advisors, it's customers who are going to be determining the viability of your core concept. So immerse yourselves in customers. Sridhar, immerse yourselves in yourself in customers. Raju, immerse yourself in customers so that you extract as much feedback from them as possible in defining what you are going to be working on. With that, I look forward to listening to more of your pitches and working with more of you next time. Thank you very much for coming. It was a pleasure and it was fun working with you today. Bye.